Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar, since rebounding off 73.70, has managed to hold its bullish bias and now reinstates some positive signals viewed from the RSI as it breaks the midway point. With the resistance cleared at 74.05, now gives further opening to the upside to 74.60 and reassess from there. The euro, with bullish divergence clearly evident from the RSI and also attempting to break the midway point, could see a rebound that may take from 107.50 up towards 108 to maybe even slightly higher. In light of the pattern, though, the strength of this divergence is a little bit of a mystery. However, if the MACD can break above the zero axis, then that would instigate a further rise that could see a clearance of 108.50 and maybe even up towards the 106 region. However, I'm a little bit cautious of this call because the dollar index, which measures the greenback strength against a basket of 6 major currencies, still holds relatively firm after touching a fresh 2-year high around 101.02. The brakes were hit on dollar yen's bull rally and now easing back from the intraday highs around 129.39. From the descent, the market is now looking towards its trend line, which is seen around 126.80.90. It is viewed from there that I would hold a bearish position if we see a break that would see a measured move down to the 123 region. Until we get that break, the risk could still be on the upside. However, with the brakes being hit and the dollar weakness a little bit now coming into play, could see a challenge towards its trend. The sterling still holding respectively around that 130 level, and in light of the pattern, I do feel the market may actually stage an upside test after a very heavy supply coming back into the market since the rejection of 131. That being said, though, I'm more impressed with the fact than how the market is held above this 130 level. And if the indicator can break and marry up with the MACD, because it holds a weak positive signal, then therefore could see a rise back to 131 or even maybe up to 132. Therefore, that would see the sterling Kiwi a little bit mixed here as it eases away from that 194 cap. The market may actually progress further to the downside at this stage with a bit of profit taking possibly emerging to about 191 and then reassess. From the shooting star, we've seen a break of the 1960 level that has confirmed this candlestick and therefore has put further weakness into play towards 1920 to 26 as an objective, with the RSI breaking down along with the MACD now nearly marrying up to the indicator of the RSI, could reinforce the downside and therefore see further supply emerging back into the market. Finishing up with oil, well, the cap around that 109 figure 50 area that I mentioned yesterday has come into play a little bit more to the fact that rejection now could see a further down test. I would like to see these indicators reinforce this view with the RSI just breaking through the midway point. Nevertheless, we could be seeing a move back to $97 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day.